Be Wealthy and Smart, episode 836.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about Wall Street silver, because the silver saga is continuing. I've talked about it on the last two podcasts, and we have a new twist in this story that's very interesting. Remember the Wall Street Bets person on Reddit who was writing articles and who was buying GameStop stock? Their logo is a cartoon picture of a young man in sunglasses with a thick head of blonde hair. Well, now that hair has changed to silver. Yes, in his picture, his cartoon hair is now silver, and he is talking about Wall Street silver. What's really at stake here is the currency itself, because there's been so much money printing, quantitative easing, if you will, creation of money out of thin air, that it is putting the value of money at risk. That plus inflation, which erodes the purchasing power of money. And, well, you have money that's worth less every year versus what used to be real money, that's gold and silver. They used to be tied to paper currency and give value to the paper currency. That kept the value stable, and the gold and silver actually increased in value over time. But President Nixon took us off the gold standard, so now we have what's called a fiat currency, backed by nothing but the full faith and credit of the U.S. government, or any government that issues a fiat currency. So what's really going on now is because there's been so much supply added, anything where you have massive supply added does reduce the value. But meanwhile, we have many banks who are short silver to keep the price down and to keep it from competing with the paper currency. So what we're seeing in silver prices when we say silver is $27.50 an ounce for the spot price is really laughable, because you can't get a silver coin for $27.50. You have to pay at least $10 over that spot price to get a coin, which means the real price of the coin is roughly $37 to $40 a coin. And that's because paper contracts are suppressing the price of silver. But the physical silver is getting scarcer and scarcer, and the more that people buy it up, the scarcer it's getting for the banks to be able to go out, get silver, and cover their shorts. Because remember, they've sold something that they don't own, so they have to go into the market and buy it back to close that position out. With these Wall Street Bets people on Reddit, the everyday investor, if you will, against the large institutions, we saw on Sunday, JM Bullion reported that a typical Sunday for them would be about $1 million in silver sales. Last Sunday, $28 million in silver sales on Sunday alone. So people are buying physical silver. They realize that the price of silver is a farce, and it's worth much, much more than the spot price is telling us, because those are paper contracts that have been depressing the price of silver. As I said on my last podcast, if we adjusted silver prices for inflation, the correct price for silver would be somewhere around $800 an ounce. Now, the dealers are selling out of silver. Almost all the dealers are very low in their stock, and many of them are completely out of their silver eagles, which are the most in-demand coin that I know of. But now we hear from the U.S. Mint that they are saying, quote, they can't meet surging demand for silver and gold. So now the U.S. Mint is actually not going to be able to get the silver from the mines because we had 40% of the mines closed due to COVID. So there's no silver coming out of the mines. Where is the Mint going to get the silver to make the silver coins? They can't. So we're not going to have new silver coins, which again means whatever's out there is the supply of silver. And that's being gobbled up by the everyday person. And the big institutions are not going to be able to get that silver to cover their shorts. What's going to happen? It will break the contract and it will go to a cash auction price. And people will pay whatever the going price is for silver, which could eventually be as high as $800. It could go higher. Who knows? It's an auction. If you need to have silver to cover your shorts, you'll pay whatever you need to pay to get that silver, or you have unlimited losses on the upside. This could literally take down the banking system. And if that wasn't enough, we had an announcement today by the UK that said banks are given 6 months to prepare for the possibility of negative interest rates. And I said, this is huge and has the seeds of a financial crisis in it. The Bank of England is opening the door to possible negative interest rates. If that happens, money will flood out of the banking system and into crypto. This, along with silver, will put an end to fiat currency. It's all coming together. And by owning crypto and physical silver, you are well positioned for this crisis. The minute that people think that they are going to have to pay money to keep their money in the bank, they are not going to want to have their money in the bank anymore. And this will cause a huge run of money out of the bank into physical gold and silver and into crypto. And the article says the Bank of England took a step closer to introducing negative interest rates for the first time on Thursday after it gave lenders 6 months to prepare for such a move. Threadneedle Street's Monetary Policy Committee voted unanimously to keep the official interest rate at historically low levels, while it agreed to set the deadline for banks to prepare themselves after policymakers said they were ready to make negative lending rates part of their toolkit. According to the minutes of the meeting, officials were split over asking lenders to put in place the measures needed to facilitate negative rates on loans and mortgages, with some fearing it would signal to investors that the central bank planned to move ahead in the next few months. But the committee agreed that to include a cut in interest rates to below zero in the raft of measures available to policymakers, lenders would need to put in place the technical requirements allowing them to implement it at short notice. There are fears that negative lending rates, which are expected to lower borrowing costs for households and businesses, would force high street banks and building societies to offer negative savings rates. Savers would suffer a loss of income, and pension funds, which also rely on deposit savings, would also be hit. Officials said the balance of risks in the economy, mainly from the new variants of COVID overwhelming the benefits of the current vaccination program, meant it needed to keep rates low. The negative lending announcement came as members voted unanimously to keep the official interest rate at the historically low level of 0.1%. And that comes to us from The Guardian and was written by Philip Inman. That's not the complete article. There is more there, but that really is the part that we're talking about. So the Wall Street silver people couldn't be more on target with their timing. And here's a quote that I found from Goldenomic, who put this so well. They said, if Redditors were outraged by the 140% short position of hedge funds against GameStop shares, they should be outraged by the 5,000%, quote, in excess of 500 times, end quote, of traded silver ounces in the New York silver futures market and the excess of 100 times of traded gold ounces in the New York gold futures market almost every year in comparison to annual global gold and silver production. Their short position is 5,000% in excess of 500 times more than the traded silver ounces in the futures market. That is the biggest short that exists. And it will have the same effect as the people who bought the GameStop stock. where they were buying it in the low single digits and it went up to $350, $450 a share or higher because the hedge funds were buying it to cover their shorts. And they suffered major losses because as whatever you are short rises in value, you have the potential of unlimited losses. So the higher the price goes, the more the losses are for the establishment, for the banks that are short the silver. The Wall Street silver people from Reddit said, "Friends, the next $1.9 trillion stimulus bill is being pushed through. Most of us will receive $1,400 or $2,800 or more of printed money. Convert the Ponzi money to real wealth. Share and upvote the silver stimulus movement." And then they had a picture of a lot of silver coins there. So I'm not saying this is what we're doing. I'm not saying that we are following along with this strategy. I'm simply saying that silver has been the most undervalued asset on the planet for years. And its intrinsic value is much higher than $27.50 an ounce. How high will it get? We don't know. But what we do know is that everybody who has physical silver in their possession is out of the situation of the fraud. It's out of the paper price fiction because you have the real asset. The fictional price is the contract price. So they can say the spot price is $27.50. They can say it's $20. They could say it's $5. But try and go and buy silver, and you probably can't get it under $40. So what does that tell you? It tells you that there is a complete disconnect happening between the paper contract spot price and the physical silver price. And that is going to get further and further and further apart. So that divergence between spot price on the contracts and the physical price that you literally have to offer someone in order for them to part with their physical silver are two completely different things. And that's why it's so important to have the physical silver in your possession and not to be investing in something like SLV. So I think originally the Wall Street bets people were going after SLV, which really was a tactical error. That is paper contracts. What they really needed to do was go for the physical silver. With the mines being shut down, the physical silver being sold out at the dealers, the U.S. Mint not even being able to create new coins, that tells you silver is in high demand, low supply, and then we have some desperate people who are short silver who have unlimited losses coming unless they get their hands on physical silver and cover those short positions. This is going to be a very fascinating story to follow. I think that in the next few weeks, this will unfold. On February 24th is the day that they are supposed to be delivering physical silver. We'll see what happens on that day. But in the end, I think that the exchanges are going to have difficulty with this discrepancy between the contract price and the physical price. And I think that at some point, the true value of silver has to be where silver actually trades. Whether that takes 2 weeks or 2 months, I can't tell you. But I can tell you, at this point, it looks like that has to happen sooner rather than later. So seek advice from a financial advisor. Don't consider anything I've said as financial advice, and know that there are significant risks with trying to take advantage of this strategy. So be cautious, always stay diversified, don't put all your eggs in one basket. But we will be reporting into you as this story unfolds. I have a feeling there are many more interesting stories to come from this. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.